What's up guys, Jake here. Recently on my channel I've been talking a lot about my brokerage account challenge, and one of the most frequent comments that I'm getting is, Jake, how do you pick your stocks? How do you find new stocks to invest in? So in this video I'm going to explain to you my process for finding new stocks to invest in, but first I will tell you how I do not pick new stocks. And I don't listen to other finance YouTubers. There are lots of channels out there that push terrible stocks, and every time I see this thumbnail about the next 10x stock to buy right now, I just cringe a little bit. And it's partly not their fault, the creator's fault, because this is just how the algorithm works. People make the content that gets clicks. When people talk about a 10x stock, that makes people excited and then they click on it. However, when you look at the hottest stocks of last year, 2020, and check in on how they're performing, it's not good results. Nikola down 86%, Plug Power down 62%, Churchill Capital down 66%, Workhorse down 68%, NEO down 42%, Palantir down 42%, Tattooed Chef down 30%. There are lots of other hyped stocks. Just go to these YouTubers' channels, look at what videos, what stocks they were promoting a year ago. Nearly all of them have crashed. And I've checked out the videos of these other finance YouTubers, and honestly, it's just an echo chamber. One channel will start pushing this penny stock or SPAC or IPO, and then the rest of them pick it up. It gets views, it gets pushed in the algorithm, it's just an echo chamber, and there's no real substance there. When I watch a video with somebody recommending a stock, I say, what are their fundamentals, what are their technicals, and a little bit, what do we know about qualitative analysis? So when evaluating a stock, these are the three things you should be looking for. Fundamental analysis is, what is the book value of this company? Every quarter, companies have to put out 3 documents: the income statement, the balance sheet, the cash flow statement. What is their earnings per share, free cash flow, book value, profit margin, return on equity? A lot of these companies don't make a profit, and they don't have any fundamentals, so YouTubers don't even mention them. Next up is technical analysis, and once again, these YouTubers don't mention anything. If you're trading in the short term, less than a year, and you're not referencing a chart, you're going in blind. You probably have worse than a 50-50 chance of actually successfully timing when you purchase a stock. Finally is qualitative analysis, and this is mostly what finance YouTubers talk about when they push bad stocks. They say the company's CEO is great. They're talking about, their revenue projections, their sales projections, and I don't believe it. I don't believe any of it. Whatever a company says they're going to be able to do in 1 year, 2 year, 5 years, that's a rosy, optimistic outlook. It's the job of the CEO and the job of the company to say that company is awesome. So it's your job as the investor to be speculative and to question what they're putting out, which is why fundamental analysis, their past history, and technical analysis, their recent trends, are so important, because what the company says about itself, it's not really relevant in my opinion. So if you're an active trader and you want to see your account balance going up in the near term, less than 1 or 2 years, you need to consider fundamentals, technicals, and a little bit of qualitative. And it kind of hurts me because Graham Stephan, a guy who inspired me to start my channel, put out a video 5 days ago saying my $5 million investment, and he revealed all of his individual stock picks. Now, Graham Stephan is a millionaire. He's more than capable of dumping $20,000 into these speculative plays for excitement or for fun. But in this video, he didn't reference fundamentals or technicals at all. All that most YouTubers give is just a little bit of qualitative of, I like their product or service, I believe in this company, I think long term they're going to go up and up. So everything he's buying, he plans on holding for years at a time, and if it goes down in the short term or trades flat for years, I don't think he cares. However, if you care about your account performance in the short term, less than 1 year, and you want to see your account balance always going up, then you need to be very selective. You need to be very picky about what stocks you choose to invest in the short term. There are 2,800 stocks publicly traded on the New York Stock Exchange. I honestly would never touch 95% of them. There really is only about 100 companies that I actually would invest in today. And what do I not trade? I don't trade foreign stocks. I don't trade IPOs or SPACs. I don't trade small caps or penny stocks. I don't trade pharmaceutical or biotech companies. And I don't trade companies that I don't understand. If I can't explain in 2 sentences what this company does and how it makes money, then I'm not going to trade that stock. Now, I'm not saying you can't make money with these stocks. Surely you can. Lots of people do. However, for the system that I've developed here on my channel, these stocks are just too unpredictable and volatile for me, and therefore they don't interest me. I've gone into more detail how I evaluate stocks in previous videos, so I will just quick recap what I'm looking for. Concerning fundamental analysis, I just do 5 quick things. It takes less than a minute. Number 1, is their revenue for this company increasing year over year? Number 2, are they profitable every year? Revenue minus expenses, are they profitable as a company? Number 3 is, are the shares decreasing? Do they do stock buybacks, or at the very least, are they not issuing new stock? When companies issue new stock, they dilute the value of the shares you've already purchased. Number 4 is their P/E value low compared to where they've been valued in the past, or at least is it low compared to other stocks in their industry? Number 5 is price to free cash flow, and free cash flow is very important for a company. Money in, money out. It is what money is available to issue dividends, buy back stock, pay down debts, improve the company, make acquisitions. So is their price to free cash flow low compared to where it's been valued in the past, or once again, valued against other companies in its sector? Concerning technical analysis, is the stock in a downtrend? Do not buy the dip. This was actually very hard for me to learn, but when you follow the chart and read the chart, if a stock is trending down, ignore it. Wait for it to bottom out, wait for it to reach a new equilibrium between buyers and sellers and start trading sideways. Then you can buy it if you want. Number 2, does the stock form nice support and resistance lines? There are lots of great companies that the stock price just acts predictably. It forms support lines and resistance lines around nice round numbers like 50, 75, 100, 200, 300. Once you start looking for these, they become very obvious, and then you can make your purchasing, you can time it correctly for when the stock acts predictably. Number 3 is huge, and that is the stock well rested? There are periods, long periods of time where great companies, the stock price will just trade sideways. What's happening here is the stock got ahead of its valuation, and it's trading sideways because there's a new equilibrium between buyers and sellers. This is called consolidating, or sometimes channeling, where the stock price will just bounce between 2 nice round numbers. And this is great because the share price of the company is waiting for the valuation to catch up to it. The 100-day or 200-day moving average is slowly dragging up to where the stock is currently resting at. And as long as the revenue of the company is increasing, that stock price in the near term is due for a breakout, and you can time your trade well. Number 4 is, has a new uptrend started? And this is counterintuitive, but sometimes the best time to buy a stock is when it's at an all-time high. If the resistance line created by sellers has been broken, then the stock is now in a breakout, it's in an uptrend. That actually is the best time to buy that stock or buy a call on that stock. And eventually it will hit a new resistance line, usually at a convenient, nice round number, and then start channeling or consolidating sideways again. And number 5 is, are the moving averages lined up? The 20-day, the 50-day, the 100-day, the 200-day. Are they stacked on top of each other? And it's creating a very stable, predictable stock chart. And then finally, qualitative analysis. And this, in my opinion, honestly is the least important, but this is what finance YouTubers talk the most about. And I just do a Google News search and use common sense about what's going on in the world. If there's a newsworthy event in the short term that can drive a stock price up or down, generally I just want to avoid newsworthy incidents. I don't want to be caught off guard. So if there's news happening with a company, I'll just ignore that stock in the short term, trade other things. You can be as picky as you want. So how do I find my stocks? And what people want me to tell them is that, hey, you can use a stock screener like FinViz, insert these numbers, boom, you got the magic list of the best stocks to buy. And unfortunately, I have to tell you that stock screeners don't work. They can find the stocks you're looking for certain parameters for sure. However, the problem with stock screeners is that companies are valued differently. A bank is valued differently than an insurance company, which is valued differently than a car company, which is valued differently than a software company, which is valued differently than an energy company. So to say I want a PE ratio of less than 20 or a price to free cash flow ratio of less than 20, those numbers don't mean anything. It doesn't work because different sectors and different companies are valued differently. You can't find the best stocks for certain sectors using a screener. And what you have to do to determine if a company is undervalued is compare its price today to where it's been valued in the past, especially the last 5 years. Or you can compare that company's valuation today to other similar companies in its industry. So we've established that stock screeners are not the best. So how do I do it? How do I find new stocks to invest in? And my method is a little strange, but what I've done in my brokerage account is I've bought fractional shares of hundreds of companies. So usually when I show a picture of my account, I have it sorted by percent holdings, percent of the account. However, if I scroll down, there are hundreds of companies in here. I have a $5 or $10 fractional share. This is my cost basis of hundreds of companies. There's probably about 400 companies in here. Charles Schwab only lets me buy fractional shares right now of S&P 500 companies. Eventually, they will expand this and allow fractional shares of ETFs and small caps. But I have, seriously, fractional shares of 400 companies in my brokerage account so that I can watch the performance of all of them every day. And if we go to the top, we can easily sort them by performance. So here is day change. And if we click on this, we can sort by the worst performing stocks of the day. So as of the filming of this video last Friday, State Street Corp was down 7%. Bank of New York Mellon was down 4%. If we want, we can go on Google News and figure out why. Why did State Street go down 7% in one day? That's a big move. And if I was looking to buy put contracts, then maybe these worst performing stocks are in a free fall, and that's actually a good time to buy a put on these companies. And if we just reverse it, then we can see the biggest gainers of the day. So PPG Industries, I have no clue what this company is. I've never heard of them. They were up 8.76% in one day. Wells Fargo was up 3.79, and hey, I have a call contract on Wells Fargo. Sherwin-Williams was up 3.71. So let's go ahead and just look at the best performing stock that day, PP Industries, and we'll just check it out. Why did this go up so much in one day? So we're doing the qualitative analysis here. I'm on Google News, and I guess they had an earnings report. PPG Industry stock outperforms competitors despite losses on the day. Q1 earnings and revenue tossed estimates. So they had their quarterly estimate reports and they did well. So that's cool. Let's check out PPG's stock chart to check out their technicals. Is the stock currently in an uptrend? Potentially, is this a buy? And when we look at their, let's see here, 6-month performance, actually, that's not bad. So you'll notice that the stock was in an uptrend spring, summer, into the fall of last year. It looks like it halted in December, and then it's been trading sideways for almost 6 months. So the stock was actually due for a breakout, and on their Q1 earnings, it shot up, 8% in one day. So now let's go on a website that I really like. This is macrotrends.net. You can use lots of company websites to look up companies' financials. This website is free and it doesn't require a login. So we'll type in PPG, and I just want to check my 5 things about this company's fundamentals. The first one is their revenue increasing? And not really. When we look at their revenue over the last 5 years or 10 years, it's basically been flat. This company hasn't been increasing revenue at all. So that's kind of a strike in my first opinion. Let's go to net income. This is their profitability, and they're profitable every quarter, which is nice. They're not going negative, but their profits aren't increasing. It's not really a growing company. So let's click on shares outstanding, and this is good. You can see that the number of shares in existence has been decreasing as they've been doing stock buybacks. Looks like because of the pandemic, they've halted, but that's understandable. Now let's go to price ratios to see what is the company being valued at right now, and is it good compared to its prior valuations. And the PDE right now is at 33. That's an all-time high. It's been valued in the 20s, teens, as high as 24 or 30 before. So its PE is really high. Honestly, this doesn't look like a buy to me, but we'll check out my fifth factor, price to free cash flow. And their price to free cash flow is currently valued at 21. It's been as high as 31, 28, 24. So price to free cash flow isn't terrible, but I don't know what this company is. PPG Industrials. I'm just not interested. So the second gainer on the day was Wells Fargo. I already have a call contract on Wells Fargo. So let's check out Sherwin-Williams. And there's probably not any newsworthy events here, but how do you spell Sherman-Williams? It doesn't really look like there's any recent news on Sherwin-Williams, why I expect to continue outperformance. This article from Seeking Alpha is 8 days ago. So let's look at their technicals, SHW, and this looks good. Just glancing at it here, let's go to their 5-year charts, and Sherwin-Williams is a beast. Look at this. This is a very beautiful stock graph with the 20, 50, 100, and 200 almost being perfectly lined up. And when we look at the 1 year, that doesn't look pretty. Looking at the 1 year, it was in an uptrend, and then it halted around September of last year. The stock has then been channeling. It's been bouncing between a low of 225 and 250 for about 9 months, and it recently, as of March 26, broke through the resistance line of 250. It's now in a breakout, which means that Sherwin-Williams stock is going to keep going. It's probably going to hit a nice round number like 300 or 350 and then start trading sideways. It's going to start channeling again. So you'll notice that the 100-day caught up to the share price. The 200-day caught up to the share price. As soon as the share price touched the 200, that was an indicator to investors that it was due for another breakout. So Sherwin-Williams, the technicals look amazing. So let's look at their fundamentals now. SHW, and we have revenue. Wow, their revenue is increasing a lot. This looks like a really good company. Net income, are they profitable? And yes, their profits have been increasing. Let's look at shares outstanding, and their shares, they've been decreasing over time. So this is a company that does stock buybacks. We'll go to the price ratios, and we have P to E. So currently it's at 12, and it's been valued in the past as high as 12, but usually the P to E is historically been below 10. So it's high, but not really that high considering how overvalued everything is in this market right now. And then finally, we'll look at price to free cash flow, and its price to free cash flow is only 7.9. It's been valued as high as 9 or 9.27, 9.95. Sherwin-Williams looks like a buy right now. If I were to buy a call contract on this, it would probably go up to 300 in the next week or two. So I could probably capture a couple $1,000s worth of value if I just bought a call contract on this on Monday, which honestly looks pretty appealing. So there you have it, guys. That's how I find new stocks to invest in. And once again, I mostly only pick predictable, safe, profitable, well-established, well-reputable stocks, and then I buy call contracts on them to leverage my money. This seems pretty risky to some people, but tossing thousands of dollars into an unknown 10x stock that doesn't have technical or financial history, that seems riskier to me, honestly. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, if you have any comments or questions, let me know down below. I'll help you if I can. Till the next video, take care.